Volume accumulation analysis, the most important topic of all. Now, volume accumulation means to add more or gather. Now, in stocks, accumulation, it means buying of shares. So you are accumulating them, you are adding more, you're gathering them, and that's what is stock accumulation. The more people that purchase the share, then it means more shares are accumulated. Now, you would have seen in the market that suddenly there is a buy volume 50,000, 100,000. Now, why do you believe someone is entering such a big order in one go? Why isn't he like buying it 5,000, 1,000 and like in smaller chunks? Because he's accumulating a higher amount of shares. Therefore, he's using 50,000 as a mean to gather more or accumulate more. Now, basically, volume analysis combine volume with price weighting analysis. So you get two things, volume and price weighting analysis. It strengthens the analysis in easy terms. Now, this analysis is useful in understanding divergences because sometimes you see that the price is rising but the volume is falling. That is what is called divergences. Now, volume explains the trend, as the trend with low volume is also dangerous, because if there is no volume, then this means someone big is stuck in it and he is trying to bring the price back to his level so that he can sell and exit the trade. Now, volume accumulation analysis help you pick this pump and dump scheme, because if you're seeing something rising without volume, then it's a red flag. Now, accumulation means buying at the ask price rather than bid price. Now, what really happens is when you're seeing in the market, it is really like fluctuating in milliseconds. So you might not be seeing that. But what really happens is, let's see, I see at $9.31, someone is selling 10,000 shares. So I can suddenly put in a 60,000 shares order, and on the screen, within a millisecond, you won't see that 10,000 shares being sold, and suddenly you will see 50,000 shares being bought. So it's like really millisecond stuff, but it's accumulation, and therefore people are buying at the ask price rather than the bid price. Now it pushes the price higher as buy order is feeded constantly, and it drives the price up above resistance zones. In accumulation, the volume and price is higher than a day before or above the moving average of volume. So these are the things that helps you understand if accumulation is happening or not. You can also check about the total orders in that stock or underlying security. Example, if 1,000 people instead of 10,000 bought 1 million shares, then it will mean heavy accumulation day. Because if 10,000 people bought, then the per order basis, it's a low volume, which in turn means that small investor is buying, as 10,000 people buying is like the really small investor, retail investor buying, and you would know it through the total orders. If the volume is with like huge total orders, then it means smaller investor is in. Now, smaller investor cannot make the stock go higher because their purchasing power is low. Whereas the 1,000 people, if 1,000 people are buying, This means that institutional investor is like present in the market, because if 1000 people bought 1 million shares, then it's a like telltale sign that someone big is in the market, because the local investor or retail investor cannot buy it like every day, whereas the institutional investor usually have a long term goals. So he isn't buying just a million shares, he might be buying more, and they might be buying with other retail investors. That's what is volume accumulation analysis. Thank you.